Hello and welcome to Insider Shot. So today in this video we are going to discuss a very simple and effective Bank Nifty option buying strategy. So in this strategy you will not need any indicators. This strategy is purely based on simple price action. Okay, so let's see what this strategy is. So here I have Bank Nifty chart on 5-minute time frame. So this strategy works on a 5-minute time frame. So all you need to do is let the first 7 candles close. Okay. So the candles from 9:15 to 9:45, you need to let those 7 candles close, and all you need to do is mark a line at the high of those 7 candles and at the low of those 7 candles. Okay. So let's see. We'll take an example of 7th of May. Okay. So here you can see 1, 2, 3, 4, 5, 6, 7. So first 7 candles will mark their highs and will mark their lows. Okay, so now all we have to do is we have to wait for the break of their high or their low. Okay, so suppose on 7th of May the low of the first 7 candles was broken. So this was broken at the 10:35 candle. Okay, so one needs, like, you need to remember that you need to let the candle close outside the range and not trade just when the candle breaks down or breaks out of the range. You need to let the candle close. Like you can see on the 10:35 candle, the candle did have a closing outside the range. So now what we'll do, we'll see the closest option price to that candle. Okay, so this candle closed at around 33,035. So what we'll do here is we'll buy 33,000 puts. Okay, so let's see the option chart. So what I do is I normally trade this in monthly options, because in monthly options there is very less theta decay compared to weekly options, so you can hold that buy or sell for a longer period of time. So let's see, on we have 3 we will be buying 33,000 put, May 33,000 put on 7th of May. Okay, so we'll go to see 7th of May the range was broken at 10:35. Okay, so we'll see the 10:35. So what we'll do, we'll be buying at the low of this candle. Okay, so the 10:35 candle, this is the 10:35 candle. So what we'll be doing, we'll be buying at the break of high of this candle. Okay, so you need to be very quick in punching orders in this strategy, because Bank Nifty being a very volatile index, the prices keep on moving up and low very quickly. So one would have generally bought it around this point of price. The price around here is say 906. So what I do is I put 60 rupees stop loss per lot. Okay, so per lot you will be having a loss of 1500 rupees. In Bank Nifty you need to put the SL in the system, because if a volatile up move or down move comes, you can be in a big loss. Put the loss in your system, and as we move ahead I'll show how you can keep on decreasing your stop loss, and how to keep increasing your profit. So this is a very profitable strategy. So let's see. So right now we would have bought this option 33,000 put around 905, and we would have had a 60-point stop loss, which would be around 845. Okay, and we'll be holding this. So normally I take a 1:2 risk reward. So if I'm taking a 60-point loss, I'll be booking at least 120 points. I'll book few lots at 120 points because I trade in multiple lots, and I'll keep trailing the other left lots. Okay, so here we can see at 905 we bought this put, and this put made a high of say 1030 rupees. So we made a profit of around, see, our risk reward, which was 1:2, the 120 rupees profit was made. So what I would have done, I would have booked half my lots or whatever I'm holding at the reach of that 120 rupees target. And if you're trading in less lots, or you are happy with that 1:2, you can book all your lots here. So what I do personally to manage risk is that for every 10 to 15 rupees move in that option price, I keep increasing my stop loss by 5 rupees. Sorry, I keep decreasing my stop loss for 5 rupees. So here you can see once the price would have started moving up, my stop loss would have been started decreasing from 60. So every 10 to 15 point move, my stop loss would have decreased by 55, 50, 45. So what would have happened at when prices started to come down again at this point? All my remaining lots would have been sold. So even that the lots would have been sold around this point, I would have made a profit. So in buying option, what's the benefit is that then your risk is defined. So you can let the option run as long as your trailing stop loss is not hit or your risk and reward is not hit. Okay. So we'll look at other few examples. Okay, so this strategy works on a trending day. If it's a sideways day, don't use this strategy as it will lead to your stop loss hit. Okay, so we'll see on 10th of May. You see, this was a very trending day. This was the low. The first candle was the low, and we'll mark the high. So see, this was the high of the candle. We'll mark that high. The first 7 candles. This was the high. So that high was broken at 950. So what we'll do, we'll see the nearest call, which will be 32,800 call. 32,800 monthly call. I trade in monthly call because there is very less theta decay. So on 11th of May. See, at 11th of May, we would have bought this option at the break of high. So we would have break of high around this candle. So that our buying price would have been around 860. You can say this is the 950 candle. Around 860 would have bought this option. So our stop loss would have been 800. Okay. So, and you can see after that, you would have got a very good amount of profit, a good jump in profits once the Bank Nifty started trending in our direction. So the high of this was 1070. So you can see you would have easily made 200 rupees of profit. And for me, I would have booked half my quantities at 120 rupees, 1:2 profit, and I would have trailed my stop loss. Still, I would have made profit in all those left lots which I had. So for one thing I'd like to mention here, the tight stop loss system in this strategy helps you minimize your losses. Okay, so once in a while you'll have a very good trending day. We'll see it ahead in other few examples that you'll be making a lot of profit, that is 1:4 and 1:5 profits as well. Okay, so you need to keep trailing your stop losses on those days and take your losses as quickly as you can. That 60 point should be your concrete stop loss and you should not leave that. Okay, so we'll see another example so that this gets into your mind this gets hammered into your mind. Okay, so we'll see 12th of May as well. So this was the high of the first 7 candles and this was the low of the first 7 candles. Okay, see, at 10:20 a.m. the low was broken. Okay, at 32, at that time the spot was around 32,568. So what we'll do, we'll take 32,600 puts. See, on 12th of May. See, at 12th of May at 10:20 candle. The 10:20 candle we would have bought at around 780 rupees. The high was 849. So here what would have happened, that we would have hit our stop loss. Okay, so we would have bought it around this point and the high was at this point around 870. So we would have not got our, you can say, 1:2 target which we have. So what would have happened? See, first you would have bought around 780 rupees, 770, 780 rupees, and your stop loss would have been 710. But since the price made, you can say, a high of 60 rupees from our buying price, as I told earlier, for every 10 to 15 rupee move on the upside, what I do, I start decreasing my stop loss. So you can see, even if you take 15 points to decrease that 5 rupee stop loss, for a 60 point up move, you would have reduced that stop loss by 20 rupees. Okay. And your stop loss would have been hit after that because the market reversed. You see the market came down and then it reversed back up. So this reversal, this market coming down from this point and again reversing, all our stop losses would have been hit. But you can see, if we are going to take the profits, we always go that for that 1:2 ratio. We get 120 rupees and we keep trailing, and there will be days where we'll getting more profit. But our stop loss, that 60 rupees per lot stop loss, was reduced to around 40 rupees. So this strategy works very good. If you keep minimizing your losses, you will get very good profits on days which is very trending. Okay, so we'll see another example when it was a very good trending day. Okay, and if you would have bought options on that day using this strategy, you would have made a lot of money. Okay, so let's see. On 17th of May, you can see market opened very bullishly. A hammer on the first candle will mark the first 7 candles. So this was the high of the first 7 candles. Okay, you can see at 10 o'clock the high was broken at around 32,760. So we'll be buying 32,800 calls. This was broken at 10 a.m. Okay, so we'll just go on 17th of May. You can see at 10 o'clock this candle, you would have bought around this price point. This would have been our buying point. Okay, at around 660, and our stop loss would have been 600 rupees. But since Bank Nifty rallied so much that day, now you can get an idea, this much would have been your profit. Okay, because as I said, I booked few quantities, few lots at our 1:2 target, and then rest I keep trailing. So you can see from 660, the high that day was 1144. You can see around 90% profit on a single day. Okay, our trailing stop loss would not have been hit on that day. So you can see the amount of profit you would have got on this day and the loss which we made on the previous example which you saw. So you can just compare the losses you'll be making on this strategy and the amount of juice, amount of profit you can get from this strategy. So there'll be days when you get this kind of move, and to avoid getting losses on days where this kind of move happens, we need to keep your stop loss in the system. That's it. If you keep that in your system, you will never make, any day you will not make loss more than 1500 rupees per lot, but your profit capacity is unlimited in this strategy. Okay, so as you can see, there are certain examples like on 18th it was a very sideway market. Okay, the first we'll just mark there. You can see, so this day our stop loss would have been easily hit because there was a breakdown, but market again quickly went up. So there was a breakdown from this point, but market again rallied up. So what this shows, if you are having a tight stop loss in the system, max profit is 60 point. No worries. There are days we'll be making around 500, 600 points. So you need to capture those days and take your losses quickly. Okay. See, same on 21st, you would have, the market gave a good rally, but then it didn't give any breakdown or breakout, and it just kept on consolidating. So once you start using this strategy, what I'll tell, once you start using this strategy, you'll get better at it. Start with few lots, start with 2-3 lots, and then once you get confident with this strategy, keep increasing your quantities. And why I trade mostly month-end calls, monthly calls, is there is less theta decay, and weekly options there is a lot of theta decay. So even if there is a good move in Bank Nifty, you might not be able to take out that amount of profit because of theta decay. Okay, so I'll just show you that as well quickly as what theta decay can do to your profit. So this is just today's expiry. Today was the monthly expiry. So on this day, let's mark the high and lows first. So this was the 9:15 candle. We'll count 1, 2, 3, 4, 5, 6, 7. So we'll mark the highs and we'll mark the low of the 7 candle. You can see it was a volatile day. At around 11:45, the high of the candle was broken. High of the candle was broken at 11:45. You can see here the high was broken here as well, but it didn't give a closing above the high, so we'll not be buying it. So we'll buying at this point of time. So the high that was broken was around 34,750. So what we'll be doing, we'll be buying the 34,800 calls. Okay, monthly calls. So since it was expiry today, so I'll show you what theta decay does to your profit. At around 11:45 candle, you can see we would have bought at this candle, the high of this candle, same with a 60 point stop loss around 156. Okay, so you can see our stop loss would not have been hit. We would have got a 100-point profit, but the markets again reversed back to our breakout zone. The markets, it did reverse back, but it just again bounced back from our breakout zone, this zone. But what happened due to the theta decay, due to today's expiry, the prices came down heavily and our stop loss, trailing stop loss would have been hit. Okay, so if the monthly expiry is close, just go jump to the next weekly expiry or next monthly expiry. So you will get saved from this theta decay, and keep trade quantities in the amount which you can take the losses. If you are ready to take 3,000 or 4,500 rupees loss per day, trade in just 2 to 3 lots, because per lot SL in this is around 60 rupees, which is 1,500 rupees. What you need to do is keep practicing in this strategy using a few lots, and once you gain confidence, start using this strategy with higher number of lots. And remember, keep your SL in the system and keep booking profit. Don't let profits slip out of your hand which you already made. You can also use this strategy in Nifty. I personally use this in Bank Nifty, and if you get some profits out of this strategy using this strategy in Nifty, do leave a comment on this video. And if you like this video and if you have learned something new from this video, do subscribe to our channel and hit the like button. Okay, thank you.